Okay, well, let's get started. Again, I'm Caitlin Moore, the Financial Literacy Manager here at Union Bank. Thanks for coming. This is week 3, and we're going to go through Banking 101, just the basics of a bank, and then with some security involved with this conversation. And then we'll talk about credit and what credit is and how to build and establish credit. We might not finish that one in the hour time. So I'll keep an eye on the clock, and if we might not even start it. We might just carry it over in the next 2 weeks, depending on our time. But I will do as much as I can within this time limit. So let me get here. Okay, well, let's get started. So Banking 101. So I'm just going to explain a little bit about the branches and who you would meet if you go into a bank. So let's talk branch versus drive-through. The term branch means a physical bank, so a physical location, and it's where you can receive face-to-face services. So UBT, if you think of it as Union Bank and Trust, is like a tree. It's the tree trunk, but we have different branches. So there's one on O Street. There's actually 2 on O Street. There's one in 66 and O. There's one on Center and 48. There's a lot of places that you can go that's called a branch, but they're all UBT, and you can go to any of them and still get the same services. So you don't have to always go to the same branch in order to take care of your account. Everyone has access to that no matter what branch you're at. Drive-throughs, not every location, not every branch or location has a drive-through, but when there is, the drive-through offers most of the same services as if you were to walk into the bank. So you can still open up an account through a drive-through, though they might ask you to come inside. But during COVID, when our branches were not open, the only way to do banking was through the drive-through. So you can do most of your banking through there. A lot of times people are just depositing or withdrawing money from a drive-through, but you can also get things like cashier's checks or talk to a banker. They just, a lot of times if you're going to do much talking and discussing, they're going to ask you to come inside. But that is the difference between a branch and a drive-through. A drive-through is the same thing. It's still connected to the branch. And no matter what branch you're at, it's still a part of the same bank. All right, so who are you going to meet when you walk into a bank? This can be kind of intimidating to just walk into the bank, because there's one location that even UBT has that even I, as an employee, get a little intimidated because there's support staff there. So there's someone that's there right when you walk in the door. So you're going to see support staff, tellers, personal bankers, loan officers, assistant branch managers, and managers. And I'm going to go through who each of these people are. Support staff is really your first spot when you walk into the bank. So there might be somebody sitting at a desk or might meet you at the door. They're going to greet you and just ask how they can help you. That's when you would say, oh, I want to deposit money, or I want to open up a bank account, and they'll direct you to the right person. They're a really good person to talk to first, because they're going to get you to the right place instead of going to the tellers and then going to a banker or a loan officer, things like that. They're going to send you directly where you need to go. They're almost like an assistant, like an administrative assistant, where they kind of know a little bit of everything. So they're a great person to connect to. Not every branch has a support staff. Usually the busier ones do, the bigger branches. So if you go into one of our small locations like Center, which is on Calvert and 48, they don't have a support staff. It's smaller. You just walk in and just talk to a teller. But usually somebody's there to just say hello right away when you walk in the door. Tellers are the ones that are standing at the desk, that are standing at the counter, essentially. There's usually multiples of them, but they're the ones that deal directly with cash. So if you're going to go in there and deposit cash or take cash out of your account, they're usually the first ones you talk to after support staff. They'll help you with all those things, money orders, account management, and more. Now, if you want to open up an account, they're not the ones you're going to talk to, but they'll direct you to where you need to go. Personal bankers are the ones that are going to help you with your account. So if you need specific things like a new debit card, or you want to sign up for a bank account, a credit card, if there's things that you need to do to your account, security things, anything like that, your personal banker is the one you're going to talk to. Now, personal bankers are the ones you want to get to know. There's 1 or 2 at a branch. Sometimes there's more. but smaller branches may have one or two. And if you go to the same place all the time, you're going to get to know your banker. They're going to get to know you and your family. If you bring a pet in, that you can bring pets into like dogs into the branch, they're going to get to know you by name. So they're usually the ones that you'll call if you have questions about most things, and they can help you out with that. And most of them have been tellers before, so they know how to do all the cash stuff, and they can help you with that if there's not a teller available. But the bankers are the ones that are really going to help you with accounts, credit cards, and managing your account. Loan officers are the ones that are going to help you with home loans, car loans, ready loans. If you want to get a motorcycle or a boat, they're the ones that help you with that. They're going to be the ones that ask for certain information to qualify you for that. They'll be the one that say if you're getting a home loan, they're going to be the ones that you talk to directly throughout the month that they're working on it. So they're the ones that get to know you for the loans. Assistant branch managers are typically responsible for handling kind of the everyday operations. So they're the ones that are kind of everyone's boss in the room. So if something goes wrong with the tellers, they can step in. If they need an extra banker, they can step in. They kind of work with everyone, making sure everything's functioning. And then the branch manager is kind of the overarching manager of that branch. They can also do everything, but they're doing things kind of more behind the scenes with the employees or with cash handling, things like that. So they're more behind the scenes, but they're absolutely available if you need them. There's different things that we do at the bank, depending on which branch you go to. Some branches at UBT particularly don't offer all of these things, but one of our branches does, and our bank as a whole offers all of these. So all the branches, you can open up bank accounts, checking and savings. You can withdraw money or deposit money, apply for loans, apply for credit cards. Financial planning and business banking are at certain branches, but if you were to go to any of the branches and say, I want to open up a business account, they're going to get the right person on the phone or bring them over to talk to you. So those people are available. They're just not at every branch. And then safe deposit boxes. Most branches have these. These are boxes that will go into this that you have a key to, and you can keep some valuables in there in a fireproof and weatherproof box that will not get damaged. I know that there's a lot of concern about safety at banks. If you watch movies, banks are always being robbed, things like that. And I'm here to tell you that there's a lot of security when it comes to banks. There's things I can't even really talk about. Like, we're not even allowed to take pictures inside of our bank as employees because they're very cautious about cameras, like the stealing cameras or where our security cameras are showing up in pictures. So there's a lot of things we do to try to keep our customers and our employees safe. One of those things at UBT is we have secured doors. So we have 2 sets of doors. You can walk through the first, but you have to either ring a bell or swipe your credit or debit card in order to get in. We do this just to make sure that nobody can come in and out unless we know that they're there. So it's one form of security. You need to bring your ID for everything that you do. We want to make sure that you are who you say you are. So an ID is necessary, and that could be your driver's license or a passport or any form of ID. We have safe deposit boxes. I'll go into that in the next slide. And there's a lot of security around that. We as a bank will never give out your account information. So my sister, if she were to walk into UBT and say, I'm Caitlin's sister, I need her account information, they would say, we don't even know who Caitlin is. They won't even tell you that I'm a customer at the bank because that's part of the security of it. If any of you have heard any commercials about banking or money, you might hear this saying that goes, Fdic Insured. And what that is, and it's on all of our materials, what that is an insurance through the federal government. And what it says is for every customer, so if I have a bank account at UBT, if something were to happen to my bank account, like say somebody steals money from me, there's fraud on my account, I'm insured up to $250,000, which means they'll give it right back to me if there's fraud on my account. So this is another form of security. Not all banks are Fdic insured. Not all banks have this insurance. There are other types of insurance. This is just a particular one. So as if you're married, each of you is insured up to 250,000. So that's 500,000 between the two of you. So it's just another way that if something were to happen to your account, that you would get your money back right away, which is great. All of our staff is trained to ask questions and take precautions. They go through training twice a year and tested regularly on this. So they do a lot of training. We have some people that deal with fraud where they come to the teller line with their phone and somebody's telling them what to say, and our tellers and our bankers know how to deal with that, because that's often somebody telling them to do something they don't want to do. They take precautions. They'll ask a lot of questions if they think something is a little weird going on. So they're trained in all these things. They're kept up on what kind of scams and fraud are going on out in the world, and they take precautions to make sure that we as customers are not a target for those scams. There's a lot of accountability, which means the federal government has a lot, they do audits, so they come in and they check what we're doing. There's a lot of outside accountability to make sure that we're following the rules and that people are trained properly. So it's really nice to have outside people come in and go, hey, you're doing this wrong or you're doing it right. And we honestly, UBT does really well on our audits. So when people come in and check our books and make sure that everything's correct, we do really well on that. We have consistently done that well, which means we're keeping your money safe. Staff, if you go into the same branches, they're going to get to know you personally, and they're going to treat you like that. So it's not a one size fit all, meaning we're not going to just talk anyone into anything. We want to make sure that you are getting the services that you need for your particular situation, not just be talked into a bunch of things that you don't need. Safe deposit boxes. One moment, please. Oops. I have a runny nose today, so excuse that. Okay, so safe deposit boxes. These are boxes that you can rent. They're small to bigger. There's 3 sizes. They cost money, so there is rent for these, but they are kept in our vault. So our vault is just like what you see in TV and movies. It's where the cash is kept, your valuables are kept. It's fireproof and weatherproof, and it's usually in a basement. It's usually underground if it can be. Not all vaults are underground. We do have some branches that don't have basements. So, but these are tightly secured. So in the walls of the vault are boxes that you can rent, and each box has 2 keyholes. One of the keys you get when you rent it, and the other one the bank keeps. And the only way to open up that box is if you have your key and the bank has theirs, and they put it in at the same time. You can't open it with just one key. The reason we do this is if I rent a safe deposit box and someone gets a hold of my key and they try to go and open it, you have to go to a teller and say, I want to open up my box. And then the teller will ask for your ID to make sure that you are who you say you are. So you can't open up your box unless somebody has checked your ID to make sure that the person who owns the box is the person opening the box. So there's extra security around that. So like I said, you have to rent these, but there's things that you can keep in your box. Oh, there's 4 sizes. Thought there was only 3. There's things that you should and shouldn't keep in your box to keep it safe. And I'm going to go through a couple of those things. So what can you put in your box? A lot of people put papers in there, like their wills, trusts, passport, social security cards, things that they're not going to need on a daily basis, but are really important. Okay. Birth certificates would be one. Because if you need it, you can come to the branch and get it, but it's things that we don't want to lose, or maybe we don't want to keep in our house just in case there is a fire, or maybe we move often or something like that. It's a good way to keep your valuables safe. Some people put jewelry in their box because it's locked up and not at home. And then personal items they don't want to lose that are valuable. These boxes are not big, so you can't put, a closet in there, your shoes, but you can definitely put things in there to keep them safe. Some of the things they do not recommend or are not allowed to put in your box are weapons, illegal substances, illegal objects, or cash or currency. And the reason they don't suggest putting cash in your box is if something did happen to that money, it's not insured. So remember I said that your money, when you put it into a bank account, is insured. So if something were to happen, you're going to get it back. Well, if it's in your box and something happened, you're not going to get it back because there's no way to account for how much was in there. They would suggest if you're going to put cash in your safe deposit box because you don't need it, just open up a savings account, put it in there, because at least if something were to happen, it's accounted for and you will get it back. So it's not good to put cash. Now, I have heard of people putting foreign currency, so foreign money in their safe deposit box. Maybe they travel and they had some extra money from another country, but they don't want to lose it. I have heard of people putting that in their boxes. It's still, I'm not supposed to say it's recommended, but I do know that people do that simply because it's money that they want to use another time if they ever go back to that country. So kind of understand that circumstance. So these are boxes that you can rent. You can put some things in there. A lot of people put important documents in there. And just know that you have a key, the bank has a key, and can only be opened if both of those keys are present. And once the box is opened, the bank employee will step out of the vault. So you're in there to do whatever business you need to do with your box, your box. So employees aren't looking to see what's in your box. You have privacy while you're in there. Okay, any questions on that one about the bank? Okay, I'm going to start with establishing and increasing credit. Because the other one kind of piggybacks off of that. So this would be a good one to start with. Can someone just let me know if you could see that as a whole screen? Are we good? Anybody?
Yeah.
Okay, thank you. Okay. Establishing and increasing credit. So this is for folks that don't have credit or have credit and you want to get more credit. And I'm going to explain what credit is to start off with too. So what is credit? Credit is your ability to borrow money, goods, and services with the understanding that you'll pay it back. So really this credit is a score that everyone has if you have a social security number. It's attached to your social security number. And what credit is that score, which you can Google the ranges. Typically 500 and below is bad credit. There's good credit, which is like in the 600s, great credit and excellent credit, 700 and then 800. Really 700 and above can get you pretty much any loan, anything that you need credit for. That's 700 is really the area that you want to aim for. Those 650 and above is pretty good too. But it really is just scoring you on your ability to pay it back. And the way that this credit score kind of comes about is how often are you making your payments on time? If you're making payments, like say to your credit card, if you're just making minimum payments or above that, are you paying off your credit card? Are you paying off your loans? As long as you're paying things on time, every time, your credit will be in good standing. If you're maxing out credit cards, that's not really a good idea. You want to have some wiggle room in there, and we're going to get to that. But credit as a whole, your credit score is really just rating you on how reliable you are to pay the loan back. Okay, that's what it essentially means, is how reliable is Caitlin Moore to pay this loan back? And they'll look at my credit score and say she's either good, bad, or excellent at paying back loans. So how do you establish credit? This is if maybe you don't have any credit. This is what I like to talk to youth about, young folks that are 18, 19 years old. But I know a lot of people older than that, middle-aged, don't have credit, okay? This one in particular, the secured credit card, also is really good for increasing your credit. So if you have a credit score, but you want to make the credit score higher, this is a really great way to go. And I'm going to explain what this is. So a secured credit card is a credit card. It will do the same thing as a credit card. You go and you buy things on it, you'll get a bill and you got to pay it back. But the secured part is that you have to go to the bank to apply for a secured card and you have to bring cash to the table. So if you want a $500 spending limit on your credit card, you have to bring $500 to the bank and say, I want a credit card with a $500 credit limit, here's $500. And the reason they do that is like a security deposit for a rental home apartment. You usually pay them an extra month's rent just in case something happens, and then they'll take whatever you owe out of that security deposit. But when you move, if everything's good, you've paid your rent, you have no damages, you'll get all that money back, which is the same with this credit card. So let's say I go to the bank and I want to get a secured credit card. I want it to be $500, and that's how much I have in cash. So I give UBT my $500, and they give me a credit card with a $500 spending limit. So this month I go and I buy gas a couple times, I go out to eat, I buy my groceries, and I get a bill at the end of the month saying I spent $300. I'm going to have to pay that $300 still, just like any other credit card. I could pay the minimum payment, or I could pay more, or pay it off. So let's just say I pay it off. And I do this for a couple months. I'll spend a little and then pay it off, spend a little and pay it off. And I notice that my credit report score is going up. It's doing really well. And let's say by December, it's doing great. I can get a bigger credit card, not a secured card, and I'm ready to close my card. I've paid it off. I don't owe any money to the card. So I go to UBT and I say, I'm ready to close my card. And they'll look at it and they'll go, okay, great. You've paid it off. Here's your $500 back. Great. Easy. If I go to the bank to close my secured card and I still owe them $200, they'll say, well, we're going to keep $200 to pay off the card, and here's your $300 back. So they'll give you the leftover when you're closing the card. The purpose of this cash deposit is if you don't have good credit or you don't have any credit, that's considered a liability to the bank. It's kind of risky because we don't know what your spending habits are. We don't know if you're able to pay back this credit card. So if we have the $500, you can go max it out and close the account, and we are still going to get paid back. So that's what that $500 is. It's the same thing as a security deposit for an apartment or a rental property. It's a really great way because there's no risk involved for the bank. We're going to keep your money if you don't pay it off. We're going to keep whatever is left over and give you back the rest. It's a really great way if you're looking to just build credit. Get a small credit card, secured credit card. $500 for UBT is the lowest amount. But you could come to the table with $1,500 or $3,000 and go, I want a secured card for that much. But if you're just trying to build your credit, keep it small. This is a great way to do that because you're not going to overspend. If you have a healthy budget, then maybe spend your gas or your groceries on this card and take that cash from your budget and just pay the card off. One of the important things with building credit is paying on time every time and paying your credit card off. That's going to be really, really helpful. So only spend what you can pay off at the end of the month, which is why I recommend a really small spending limit to get you started. To establish credit, cosigners are often a good way. This can be risky business though, but a cosigner is somebody that has good credit, that is willing to sign off on the loan or the credit card with you. So if I don't have good credit, but let's say my dad does, but I need a car loan, he can sign off on it. And what he's doing is he's saying, if Caitlin doesn't pay her bill, I will pay it. Okay. So he has good credit. I don't. We're on the same loan. We still own the same loan. So if I don't make payments on my loan, it could ultimately affect his credit. So if I don't make 2 or 3 payments before he realizes it, it's going to affect his credit too, because all of this is being reported to both of our names. Now, if my dad signs on this and I do really good, I'm paying this off every month, paying on time, everything like that, his credit's going to increase along with mine. But the big part of co-signing is that if there's 2 people on the account and one does not pay, the other person is responsible to pay it off. So the bank could go after me and my dad in order to get the loan paid off. So if you were asked to co-sign something for someone else, be cautious about who you are co-signing for, because you are ultimately responsible for that loan or that credit card. So you need to really trust the person that you're co-signing for, that they're going to pay their bills. I would encourage you to ask for their budget to make sure that they can even afford to get this loan, because it will show up in your credit report, and the bank will come after you if you are a cosigner. But if you are trying to establish credit and someone will cosign something for you, it really helps because you're likely to get the loan, let's say a car loan, because according to the bank, you and that other person have enough credit, positive credit, to get a loan. So it often will help you get the loan if that's what you're looking for. But it can be risky business from both sides. Other ways to establish credit is high interest loans, like from small car dealerships. So there's private car dealerships that will often give loans to people, but at a much higher interest rate. So where a car loan from a bank may be 3 or 4% interest, a small dealership may charge 15 to 20%, but they are likely going to give you that loan with that high interest if you don't have good credit. So it's not necessarily a good deal. It's a good deal if you need a car, for instance, but it's not a good deal because your payments are going to be higher because your interest rate is higher. So, but it is a way to establish credit because oftentimes small car dealerships in particular will give you that loan. Your phone bill can be reported to the credit bureaus, which affects your credit score. So you can ask to have your phone bill records sent there, meaning every time you make a payment, that reflects positively on your credit score. It takes a little work, but you can do that. The same with household bills in your name. So your utilities, you can call utility companies and ask them to report your payments to the credit bureaus. So if you're making your bills, your utility bills on time, every time, this is a great way to increase your credit, because if you're already paying for this and you're doing well, they can report this to the credit bureaus, and that will only reflect positively for you. You can also be an authorized user on someone else's credit card. This is often what parents do for youth. So a parent like myself, I could have a credit card in my name, but I can make my child an authorized user. Now, I would not do that because he's 4, but let's say I have a 16-year-old and I want to pay for their gas or something like that. I can give my child a credit card in their name, but it's on my account, and then they're responsible for it. Now, that's a lot like co-signing, where if my child doesn't pay his bill, which I'm going to tell him what he owes, then I am responsible to do that. But it at least starts establishing credit for my child or for another person if you're going to be an authorized user. Sana asked, what is a good age for accounts for children, savings and checking? It's never too early to get an account for your child. If they're under 18, they will have to have a parent or guardian, have their name on it. So if I can open up an account for my son, Sean, and put his name on it, but it's still ultimately my account. But I already have an account for him because I put money in there for him. And if he gets birthday money, he's 4, he doesn't need to spend it. So I just throw it in there. But I'm going to teach him as he gets older how to use his savings account. I highly recommend that you open up a savings account for kids. In the fall, UBT usually does a promotion where if you open up a savings account for your child and you put $50 in, we'll match that. So we'll put another $50 in. So keep an eye out for that if you choose to do that. Usually starts in October. It's called the piggy bank promotion. So as long as you bring your child in and open up an account for them, then we'll match the money that you can put in there. And you don't have to put 50, you could put in 15 and we'll match that too. So that's a great way, but it's always a good time to start teaching your child how to use a bank account. Having a savings account for them, how does that affect me, or does it? It won't affect you unless the account goes negative, because it is under your name and your social security number. So unless that account, if there's a negative balance, that will affect you. But as long as there's money in it and enough money, whatever the rules of the bank are, then you'll be fine. Savings accounts, the question is, will it build interest? So savings accounts do build interest. Checking accounts do not. Savings accounts build very little interest, though. We're talking less than 0.5% a year. So it's not a large amount of money, but there is a way to build some interest with that. Great questions. Okay, so back to establishing credit or even increasing. Store credit cards are another way. This is a lot like that used car dealership where if you go to a store, I'm going to use Old Navy as an example because I know they do this. You can get a credit card just for their store. You can't spend it anywhere else. It's not a Visa or MasterCard where you can take that and shop anywhere and use that credit card. It's just for their store. They usually have higher interest rates with that, and you're limited to only shopping in that store. But they will often give you a credit card even if you have bad credit. It is a good way to build credit if you're using a credit card, like a store credit card, in somewhere that you shop often. So though I am not a fan of credit cards, period, and I'm not a fan of increasing or establishing credit using credit cards, if you were to go about doing this, I would highly encourage you to do it once with a store credit that you use often. So maybe a big box chain that you're grocery shopping at, or you can get clothes and shoes and necessities at. I think you all know what I'm talking about. Because then if you have a healthy budget, you can spend money on that store credit card and then take the cash from your budget and pay it right off. We don't want to use credit cards to spend extra money because it's a loan. So you don't want to be loaning yourself money through a credit card. You just want to use credit cards with the money that you have in your budget and then pay it off. Okay, because if you pay it off, then you're not charged interest. And that's the best way to use a credit card. Secured loans are the same thing as a secured credit card. Small businesses or businesses use secured loans, or they'll maybe get a loan for $50,000 and then they give the bank $50,000. It's a way to keep kind of a lot of cash flow locked up somewhere. So it's not that they don't have access to it. It just kind of puts it somewhere where they could be using credit instead of cash. And then, like I said, getting all your bills reported to the credit bureau. So there are certain things like utilities that don't normally report. But if you have really good habits with your bills, call the companies and ask them to start reporting it to the credit bureau. Like I said, it takes a little time, takes a little effort, but they are able to do it. You just have to talk to the right person to do it. Okay, so how can you increase your credit? A lot of the ways that I've talked about will increase your credit, not just establish it. But one of the first steps that I would suggest doing is monitor your credit report. Pull your hard credit. So everybody has the credit report, whether there's anything on it, I don't know, but you can go to one of these three companies. These are the main credit bureaus. These are the companies that gather all the data, all your payments, your loans, everything in your name, and keep track of that. So you could pick one of the three. If you go to Equifax.com, then once a year, you can get what's called a hard copy. It's your whole credit history for free. So you can sign up to get that. They'll usually email it to you. They could send it in the mail if you want, but that will show everything that you have ever done your entire life as far as credit goes. So I got my first credit card when I was 18. So when I pull my hard credit, I can see everything that I did from 18 years old until now, which is pretty amazing. But that's what banks do when they're looking at loans. They look at the last several years of your spending habits to see if you missed a payment, if you're late on payments, because that tells them if you are reliable enough to pay back the loan that you're trying to get from them. So I would suggest you pulling your credit, ordering your credit once a year. I would go to annualcreditreport.com to do that, but you can do it on one of these three credit bureaus. So annualcreditreport.com gives you the option, but it's a pretty quick and easy way to do that. You build an account and you pull your credit. This will also show you if you have anything on your credit that shouldn't be there. So if somebody has stolen your identity, stolen your social security card and opened up loans or credit cards in your name, or if there's any collections debt that you don't know about. This happens a lot to people where they look at their credit report and they find out there's collection debt that they didn't know about. And it's simple things like doctor's offices. Maybe you went to the doctor's and then you moved and you didn't update your address, especially if you moved out of state. You didn't update your address, but there was this lingering bill and they didn't know how to track you down, and they're not going to spend too much time tracking you down. So they just throw it in collections. But You should know what's happening with your credit, and you have a right to do so. And I would encourage you to do that as soon as possible. It can be very scary to look at this to find out there's fraud or anything else on your account, but it's very easy to take care of it because you just call these companies, whoever you chose, and say there's fraud on my account, and they actually will take care of it for you. They have attorneys, they have ways of doing this where you'll be in contact with them, but they will help you with that process. So just know that there are people that have your back if there's issues with fraud. And then if you have collections debt, especially if you didn't know about it, take care of it. And now you know. And collections debt in particular, when it's on your credit report, can really bring your score really low. I mean, it will take a nosedive with your credit score, but about 2 months after you get it paid off, your credit score will just skyrocket. It will go up really quick. So if you're looking for a quick fix to credit scores and you have collections debt, pay that off. Pay that off as fast as possible. You can negotiate with credit collections companies if you have cash. So let's say you owe $500, but you have $300 in cash. You can call them and say, I have $300. Will you take this and close the account? They'll often have to go back to the original company that you defaulted with. They'll come back and say, yeah, we'll take the 300. Then you go get a, what's it called? I'm so hungry. I can't think tonight, but I can't think of it. You're going to go to the bank and get a check with your cash and then send it to the collections agency. This way that there's tracking. You never want to just pay with a debit card. You never want to pay collections with a debit card because they can continue to charge that extra dollars. So if you're going to negotiate it and need some help, I'm happy to help you with that. You got to be rough, you got to be tough and confident, but there is a way to settle an account if you have less than what you owe, but you've got to have it cash ready to go. Cashier's check, that's the word I'm looking for. So you go to the bank, get a cashier's check, and that's what you're going to send to the collections agency. So, and that will increase your credit immensely to get that off your credit. Any questions so far? Okay, so here's some other ways to increase your credit. They're just some ideas. Pay off all collections debt, like I said. Make your payments on time every time. If you're not very good at this right now, now is a good time to start. Start making your payments on time every time, because if you get into a good habit over the next several years, it will increase your credit big time. But you'll also be able to get loans, car loans, a mortgage later if you have several years of on-time payments. Maxed out credit cards, you really need to focus on paying those down. I know that that's hard. It's easier said than done, but it's if you could get that down to half of the amount, your credit score will go up very quickly. And then call your lender to increase your credit limit. I don't encourage this. They say that good credit is when you're only using about 50% of, say, your credit card. So if you have $1,000 spending limit, you keep it at about 500. So what people have said is if you have $1,000 and it's maxed out, if you call your credit card company and increase it to 2,000 and you only owe 1,000, then you're right there in the middle. And yes, it will increase your credit, but now you have a lot more spending opportunity and a lot more debt opportunity. So I don't recommend doing this. I recommend just paying it off, pay it down as much as you can. If there's not a bill on your credit report, what's that mean? What do you mean by bill? If you could explain that, that would help. While she's doing that, I'll keep going. So be patient and stick with it. Building credit takes a while. It took a while, like if you have bad credit, it took a while to get there. It's going to take a while to get out, but there's little things that you can do to start increasing your credit, like paying your bills on time every time. Do not sign up for more credit cards. That's not the answer, because if you have more credit card debt than you make, it's really a bad idea. So it's called debt to income. There's certain formulas that say if you make this much, you should have only this much debt. So if you have more credit cards, that's saying I have more debt. So you don't want that. So don't open up more cards just to have more money available because you're taking out loans and you're paying interest rates on them. Even if you have a card that you're not using, but you have open credit on it, you're still being charged a yearly fee to have that credit card. So you're essentially charging yourself for something you're not even using. So it's not a good idea. But pay off debt as soon as you can. If you have some extra money coming in, even if it's $50 a month after all your bills are paid and all your needs are taken care of, if you can pay that on the smallest debt first. So if you have 5 debts, you're paying minimum payments for all of them, but you have an extra $50, apply that to your smallest debt and get that paid off. And then you could apply it to your next smallest and the next smallest and get everything paid off. That's the best way to go, and it's going to increase your credit. So your question, Tasana, if it's not on your credit report, I don't know that you would owe anything. That might have just gone off your credit because maybe they just wiped the slate clean. If you're getting bills for it still though, like in the mail, then you still owe it. They just haven't put it into collections yet, which is good, because it's not affecting your credit. So if you're still getting a bill for the debt, but it's not on your credit report, you still owe it. But if you're not even getting a bill and it's not on your credit report, then they probably just got rid of it. I think you'd probably be good to go. You could do your due diligence and call the company to find out if you do owe anything. But if it's not showing up anywhere and you're no longer getting bills, then I don't know how you would track that otherwise. So it's probably clear at this point. Okay. So I'm going to end this one here, see what time it is. I think we have a quick moment to go over this next one, this last one of the night, and that is checking versus credit. Let me share screen here. All right, so now that we've talked about credit, though there's a lot more to talk about with credit, and I understand that I'm sure people have questions. Feel free to email me your questions. Credit can be very complicated and very scary to a lot of people, especially if you have bad credit. It feels very hopeless sometimes if you're in debt or you see your credit score. But the biggest thing about credit, especially if you have debt or you have bad credit, don't focus on the number. Don't focus on your credit score right now. Focus on getting the debt paid off, because all the little things that you do, even paying your bills on time, will help your credit score. So if you can get things paid off, if you want to close some credit cards that you've paid off just so you don't have that much available to you, go ahead and do it, because in the long run, give it 3 to 6 months, you're going to see a huge increase in your credit score. So there are certain things that take a certain amount of time to show up in your credit, like collections takes about 2 months, and then your score will go up. Credit cards, closed credit cards usually take about 6 months. It'll show that a negative because they don't like it when you close credit cards. But if that's what you want to do, because you don't want to go into debt, do it. But it'll take about 6 months before your credit gets better. But don't worry about it. It doesn't matter. What matters is your finances and your budget and whether or not you could pay your bills. And so just pay off your debt. Don't worry about your credit score. Are there any credit cards that won't charge an annual fee? That's a great question. I don't know the answer to that. You'd have to look around. Sometimes there's credit cards out there with stores that offer promotions, like they'll say there's no annual fee for the first year, or there's no interest rate for the first 6 months. There's deals out there, but when you're looking at a credit card, you should always look at the annual fee and the interest rate, because the annual fee is going to happen no matter what. So it's usually like $100, $200. It could be a large amount that you're going to pay once a year. And then the interest rate makes a difference. Now, if you're going to pay your bill off every month, you will never be affected by that interest rate. It doesn't matter if it's 50%, it won't get that high, but it could be 5%, it could be 20%. But if you're paying your credit card bill off every month, you're never charged credit. The biggest thing though, is if you're going to use your credit card and pay it off every month, you're still going to get charged an annual percentage rate. So get one on the lower end. I think I know of one credit card that does not charge an annual fee, but I don't know if it was a promotion. So I'm not going to say what it was, but if you're looking for that, just hang out until you find one. Don't just open one for any good reason. Okay, so let's talk about checking versus credit. A lot of people get these two confused, but I'm going to go through this real quick. So like we said, credit is your ability to borrow money, goods and services with the understanding that you're going to pay it back. So think about a loan. So we've talked about credit. It's loaning you money and then you're going to pay it back. You'll use it, pay it back, use it, pay it back. So that's what credit is. Whereas checking, or what is a credit card? Sorry, I'm jumping ahead. So what is a credit card? A credit card is the loan. It's the loan itself. When the card is used, a balance accrues to which the payee is responsible to pay back every month. So I have a credit card, I swipe it, I get a bill, I need to pay that off because it's a loan. They're loaning me the money and then I'm going to pay it back. So again, think loan when you think credit card. A checking account, on the other hand, is a deposit account at the bank that allows for withdrawals and deposits of cash. So think cash. So your checking account, though you may have a debit card and it may say Visa and MasterCard, and you could still swipe it as a credit card, it's not a loan, it's cash. It's going to come directly out of your account. So like today, I went to Target on my lunch break, had to get a few things for a class that I taught earlier. And I used my company's credit card. So that is a loan. So they loan me the money to swipe it, and then UBT is going to get the bill and they're going to have to pay the company back. Now, I also bought something for myself. And so I used my debit card and I swiped it as credit card just the same way, but it automatically came out of my checking account. So the checking account and the debit cards are great because it'll come straight out of your account, but you could still use it as a credit card, but it's not a loan. So if you don't have the money in your account, you're not going to be able to use it. So it will be declined. So checking account is your account at the bank that has your cash. You could put cash in, you could take cash out, you could swipe your debit card or your debit as credit in order to use that cash. Debit card, got ahead. So it's attached to your checking account. So you can only use your debit card to swipe for things if you have the cash in your account. Okay. Most of the time it will allow it. Well, sometimes it will allow you to swipe that day, even if you don't have the money, and you will overdraft. So you will spend more than you have. The bank will cover it, but they're going to charge you a steep fee. But sometimes you can swipe. It's probably a bad idea to explain this, but sometimes you can swipe without the money being in there and then go over to the bank and put the money in there, as long as it's the same day. If you wait even after midnight, 12:01, you're going to be charged a fee. But a lot of times debit cards have security where it will just decline when you swipe it at Target if you don't have the money in there. So it's protection for you, so you're not charged that overdraft fee, which you don't want because it's usually like $30, $40. And if you do it multiple times a day, so if I went to Target, Walmart, got gas, went out to dinner, and I didn't have the money in my account, but I was able to swipe, I'll get charged 4 times an overdraft fee. So that could be $30, $60, $90, $120 by the end of the day. Plus I have to put back what I owe them anyway. So it could be a lot of money. So I do not recommend doing that. Like I said, with the credit, monitor your credit. That's the best way to do things. Look what's on there. Look what's on your credit report. If you want to do that before our next session, and then if anybody has questions, feel free. I could stop the recording if you don't want to ask a question during the recording, because I do put these on YouTube. But feel free to ask questions in this time. Just let me know that I should turn off the recording, because I would love to answer questions, because it's likely that your question, many other people have that question too. So here's my contact information if you do have anything that comes up between now and 2 weeks when we get back together. But that is it for tonight. So thank you all for being here again. I really appreciate it.